Reuters, U.S. job growth increased more than expected in June as manufacturers stepped up hiring, but steady wage gains pointed to moderate inflation pressures that should keep the Federal Reserve on a path of gradual interest rate increases. Non-farm payrolls rose by 213,000 jobs last month, the Labor Department said on Friday. Data for April and May was revised to show 37,000 more jobs created than previously reported. The unemployment rate rose to 4.0% from an 18-year low of 3.8% in June as more people entered the labor force in the sign of confidence in the jobs market. Key points. U.S. June labor force participation rate 62.9 PCT, vs May 62.7 PCT. U.S. June average hourly earnings, all private workers, rose 0.2 PCT, versus consensus for up 0.3 PCT and my Euro trademark S plus 0.3 PCT. U.S. June U6 underemployment rate 7.8 PCT, vs May 7.6 PCT. U.S. June private sector jobs rose 202,000, higher than consensus for up 190,000, vs my Euro trademark S upwardly revised 239,000. U.S. June government jobs plus 11,000, vs May plus 5,000. Comments. Stephen Englander, head of G10FX, and North American Macro Strategy, Standard Chartered, New York. Or from the Economy Euro trademark S point of view, this is about as good a number as you can get. Euro trademark M focusing on the payrolls number, plus the revisions Euro very positive. But the somewhat higher unemployment rate, which means more participation, and the somewhat weaker earnings number, makes the expansion more sustainable. Whatever worries the Fed has about overheating get mitigated. And this is subject to recognizing that this is just one number. But, on margin, say compared to having 2.9. One number. But on the margins, having a 2.9 or 2.8 on the earnings and the participation rate dropping. This is a more relaxing number for the Fed because it suggests that maybe the supply side, certainly on the labor market, is kicking in a bit. I think the market will see this as being very equity friendly. The dollar is coming off because there is a big focus on the earnings number, and in the short term it takes some pressure off rates. We have seen 10-year rates go down by 2 basis points. The market looks at this, says this is not a particularly dollar-friendly number in the very short term, but for the economy it is a great number. What is nice about these numbers is that even though they are strong and market-friendly, they are not so out of bounds that you think this is going to have to be reversed next month. J.J. Kinahan, Chief Market Strategist, TD Ameritrade, Chicago. It was what the market wanted to see, more jobs created than expected, wage growth moderate and creating jobs where you want to see them. Euro trademark S not just creating jobs, it's creating careers. Euro retail number may be a little surprising. Euro trademark S odd given the timing. Euro. Mohammed El Arian, Chief Economic Advisor at Allianz, Newport Beach, California. While sluggish wage growth counter what would otherwise have been a uniformly strong jobs report, the data will reinforce in the short term the baseline view of a strong U.S. economy that outpaces others, is able to navigate trade policy uncertainty, and will encourage the Fed to hike at least once more this year. Euro. Market reaction. Stocks, S&P E-mini futures, were little changed, reversing slight losses before the report and were last up 0.05%. Bonds, Treasury yields slipped further, 2-year notes were at 2.5406% and 10-year at 2.8199%. Forex, the dollar index extended slight losses and was last down 0.44%.